interest rate that you have on your mortgage can drastically affect your buying power and your monthly payment. And in California, it is really hard to get into real estate just because we're one of the most expensive markets in the country. Then you couple that with high interest rates and it makes it really challenging. But at the end of this video, I'm going to show you 2 different tactics that you can use to temporarily lower your monthly payments and give you a better down payment. If you want to know anything about mortgage interest rates and how it affects your purchasing power here in the Los Angeles area, watch this video. So as of today's filming, it's June 5th. The mortgage interest rate is 7.07% for a 30-year fix. Now, I have been a real estate agent for over 21 years, and last year was the first time that I'd ever seen a 30-year mortgage for over 7% interest rate. And when it hit 8% last October, I kind of freaked out. And I freaked out being in this industry. I can only imagine what the general public was thinking, or buyers looking to purchase a home here in the Los Angeles area. So it was a big shock to everybody, especially if you look at the history of what we just saw during the pandemic, where interest rates were at 3%. Back in January of 2022, interest rates were at 3%, and now they're at 7%, more than double what it used to be. Let me show you some numbers to give you some context and some perspective of what this interest rate will look like on your monthly payment. Let's say, for example, you are a buyer, you're looking to purchase a home here in the Los Angeles area, and your monthly payment that you're comfortable with is about $4,900. If you have a 7% interest rate, you might qualify up to $919,000. But if you're still comfortable with that $4,900 payment at a 6% interest rate, you can qualify up to $1 million home. Now, all of this depends on your FICO score, your credit score, how much down payment. This is just a general scenario. But given that, a 6% versus a 7% interest rate will give you $80,000 more purchasing power. That is one of the biggest factors of high interest rates. Is as interest rates go higher, buyers' purchasing power goes lower. For example, if you have a mortgage payment at $2,400 and it's at a 7% interest rate, if you drop it even 0.5% to 6.5%, your monthly mortgage payment drops $120. But not only that, you are saving $43,000 on the life of the loan. That is a huge amount of money just because you have a lower interest rate and you're paying less interest. As I said earlier, the mortgage rates nearly doubled in the last 2 years. But let me show you how much that affected mortgage payments. Let's say, for example, in January of 2022, you wanted to buy $1 million home. You have $200,000 to put down, so that's 20%. You have a good FICO score. You're buying a 30-year fixed mortgage. You have property taxes. Let's say that's about $10,000. Homeowners insurance. Let's say that's $2,500. Your total monthly payment is going to be roughly $4,400 at a 3% interest rate. That's the going rate at the time. Now let's fast forward to 2024. You're still buying that $1 million home. You still have $200,000 down. Still have a great FICO score. Everything else is the same, but your interest rate is 7.07%, which is today's rate. Your monthly payment is now $6,400, nearly $2,000 increase. No wonder people are freaking out so much. $2,000 increase on the same home over a 2-year period is a crazy amount of money. Not to mention the amount of interest that you're going to pay on the life of the loan for a 7% versus a 3%. It is absolutely bonkers. But here's the thing that's even more weird is in Los Angeles, you would think that when interest rates get up this high, the buyer demand plummeted, which it actually did. However, we are still seeing multiple offers in properties here in Los Angeles. For example, I just listed a home here in Highland Park, a beautiful home on 5511 Stratford. It was priced at $1.2 million. We had 75 people come through my open house. We had over 50,000 people view it online, and we got 4 offers, and it is currently in escrow. It's scheduled to close in 2 weeks, and then I'll let you know exactly what it sold for. But just that alone, with 7% interest rates in a good neighborhood, we're still getting multiple offers. And why is that? It is the lock-in factor. So many people when interest rates were down in the 3s and 4s, even 5s, they decided, I'm going to refinance and capitalize and get this on a 30-year fixed with a really, really low interest rate. In fact, 70% of all mortgages are less than 4% right now. If you are a homeowner and you have a 3 or a 3.5 or 4% mortgage rate, there's no way in hell that you are going to trade your home for a 7% interest rate and get a smaller house with a bigger payment. It's just not going to happen. So a lot of people who are in those situations, who have those really, really low mortgages, they're not selling their house. And what does that do to inventory? It tanks it. You can see that our inventory in Los Angeles is significantly lower than pre-pandemic levels. We have not reached the point where we are matching pre-pandemic inventory levels. Because inventory is low, it is increasing buyer demand even with 7% interest rates. Now, there is a glimmer of hope for more inventory. The Zillow Economic Research just posted that there is an 11% increase in inventory here in the Los Angeles area, which is much needed because there are so many buyers and not enough homes here in the LA area. Now, you might hear different things in different markets. That's why it's so important if you are buying a home to make sure you know the local data. LA is a different beast than other parts of the country where you're seeing incredible increases in their inventory. We're not seeing as much here in Los Angeles area. That's why we're still having multiple offers and we're still in a slightly seller's market versus some other parts of the country. Even with our low inventory, the Zillow Home Value Index went up 9.4% year over year. So I know that sounds super bleak and really depressing, but there are a couple strategies that you can use if you're buying a home here in the Los Angeles area to get a lower monthly payment, at least temporarily, in order for you to refinance later down the road when economists are predicting that interest rates are going to come down. The first tactic that I would use for a buyer, if you're purchasing a home right now, is to do a 3-2-1 buy down. If you have the opportunity to negotiate closing cost from the seller, this is how I would apply it. Instead of doing a price reduction of $20,000 or $25,000, I would try to get closing costs for a 3-2-1 buy down. A 3-2-1 buy down sounds just like what it is. Let's say you have a 7% mortgage and you're using a 3-2-1 buy down program. Your first year of your mortgage, your interest rate would go down 3 points to 4%. The second year, it would go down 2 points to 5%. The third year, it would go down 1% to 6%. And then the last year, it would go back to the normal rate that you originally got quoted. Remember, you still have to qualify based on the original loan amount, but it will buy you some time until mortgage rates start to come down. And most economists are predicting that interest rates will start to decline by the end of 2024, possibly the beginning of 2025. You might start seeing interest rates in the high 5s by the end of 2025. So if you can use this program to buy down your interest rate for a couple years, then refinance when interest rates are more favorable, that is a good option and a good tactic that I'm using with my buyers right now who are purchasing a home here in the LA area. The second tactic that you could use, depending on your income, there is a program that is offering a $50,000 grant for a down payment. A lot of times the biggest barrier into getting into a property is the down payment. But this is a really good option that you might be able to utilize if you're under $123,000 here in the Los Angeles area. You would need to have at least $10,000 to contribute towards your down payment, and you can use this as a gift. And you would also be required to take some home classes. You would need to keep the property for at least 5 years. If you do, then the grant is forgivable. That is $50,000 that you don't have to pay back if you qualify and make under $123,000 a year here in LA County. Now, you could live in LA County and buy someplace else in California, and this program would still work. If you want an extra down payment on your property that's forgivable, this is a good option. Now, there are a couple of lenders that use these type of programs. If you want more information, there is a link down below that you can get qualified for a free mortgage guide and get connected to a mortgage broker. Let me know. I'd be more than happy to connect you out, or just check out the link in my bio. I hope this has been really helpful. If you have any questions about the Los Angeles real estate market, I'm more than happy to help you out. My name is Felipecrook with eXp Realty. You can contact me down below, or you can text me at 213-268-6832. Again, my name is Felipecrook, investing in your dreams.